Welcome back, folks. Let's go out to Philadelphia and speak with John about the S&P 500. John, thanks for calling. Thanks for holding. How are you doing on Terrific Thursday?
Steve, I'm doing excellent. Thanks for taking the call.
My pleasure.
I ask if there's anything in your work on the S&P or the E-mini futures that you see in your work that could suggest between now and Christmas the S&P decline from here and make lower lows than last week. I guess that was 2630. And continue with a pattern that is similar to what happened in the year 2000, one Saros cycle ago, 18 years, 11 days.
Sure. Well, so let's look at the bearish side. What needs to happen in order for that to occur? And let's just take a look at the ES Mini, only because, John, it's a little bit easier for me with regard to signals and what we would look for out here. And one of the things that we can see, so we know a couple of things. One, like I was discussing during the break and prior to the break, how the spot volatility index is trading above all of its futures contracts out there, and that is, or maybe I didn't say that, but we looked at that, folks, and it is trading above its 50-day exponential moving average. When that occurs, there can be the surprises typically occur to the downside out there. So yesterday, even with that fabulous move that we had, even with that wide-ranging bar, and we know that typically markets don't end on wide-ranging bars out there, even with that, the spot volatility index, when it closed yesterday, was 2 pennies below the 50-day exponential moving average. 2 pennies doesn't cut it for me with regard to conviction. And we've seen that it's, in essence, bounced off that line. So as long as that is in place out here, the risk to the downside, in my opinion, is present. The second factor that we have is just a simple trend line that everybody at home can draw in on their ES mini chart, which uses the high of October 3rd, the high of November the 8th, and you can see we're still below that level. So it has not broken above there in order to suggest that price is ready to move back to the November 7th and or October 17th level. So that's the first thing that I see out here. Continuing on with the ES Mini is simply the mere fact that price has been unable to close above the top of its daily profile. Now, if we take a look at the ES Mini out here, it's really helpful for it to be able to take out a level of resistance. So you've got trend line resistance that you and I looked at. We now have this horizontal level at 2748.75. If price closes above that and the spot volatility index closes back below the 50-day, then we go run higher. Now, that higher could just simply be up into the 2800 level. And if it closes above 2843, then it would say this Christmas rally is really on its way up to the highs. So at this stage here, resistance has held. As long as resistance holds, that possibility of maybe making a lower low, retracing, all of those things are still in effect out here. However,
I appreciate that, Steve. Is there anything that you can point to either on your 2-hour, 60-minute, or 30-minute charts that show where support very near term is, and if broken might suggest lower prices?
Yeah, the 60-minute chart, I think, is the better one to do that. And that is the current profile here. The number you're looking for would be 2720. 2720 is the bottom of its bullish structured box at the moment. 2726 is the center line. That's where price found support on a closing base on a 60-minute chart today. So that's what I would be looking at as an indication that there would be a further pullback. Not necessarily that means, okay, you know, we're automatically headed down, but that would be a level of support that I would want to see broken to say, okay, there is a further pullback, a further retracement. On the 5-hour chart, which I also know you like to take a look at, John, is at about 4 o'clock this morning, it gave you that Tom DeMark setup 9 count. So, you know, if the highs get taken out, you know this better than anyone. It tells you that, you know, a pattern where there should have been some type of temporary high really wasn't much of a temporary high, and you have momentum to the upside. The level to be watching on the 5-hour time frame, it's different than the 1 hour, would be Stevie's green line, 27.10.55. So I think that you would be on to something, that a deeper retracement would be in place if both those levels are broken. Obviously, if 27.20 is broken, the question should be, well, where's the next level of support? Right now, it's 27.10. And that's what I would see as the potential for downside in the marketplace. The only other thing, John, that I would...
Steve, that's very thorough. I appreciate all that. Just in closing, I have to give you another pat on the shoulder. That new perigee pivot that occurred Monday morning, like 7 a.m., down at 26.55, was tested on Monday and then again on Tuesday. And when that held, that certainly gave us a clue as to what was to come yesterday. So great work on all that stuff. I thank you for your help.
Well, I appreciate. Hey, let me ask you a question, if I can, because you have started applying the apogee and perigee pivot to gold. So tell the audience and tell me, please, how is that working? What have you found in the couple of months that you have been tracking that?
Steve, I'm loath to give any definitive conclusions because you and I both know the gold market has been range-bound since Labor Day. So we're dealing with a sideways market, and when the market does start to trend either higher or lower, then we can comment more meaningfully on that question. What I can say is the perigee pivot for the D's gold contract is right here at 12.25, and interestingly enough, that's exactly where price is right at this moment. So what I will say just about apogee and perigee, just like on the S&P futures or the NASDAQ futures, when a market is moving up from that pivot, it's not a good idea to be short.
Sure.
And the inverse is true. So I found it helpful as a guidepost, but until this market starts to trend, we won't have any real clear evidence how valuable that tool actually is for gold and silver.
Right. Okay, cool. Hey, thanks for that update. I appreciate it. And now everybody knows that 12.25 is a pivot point as well to be taken a look at. And folks, if you're watching us on Tiger TV as well, as John has said, gold has been range bound. Here is another version of the range that you can see that it's trading within. If you're watching us on Tiger TV, all of the red diagonal trend line resistance that it's sitting at out there. So both sideways as well as diagonally, you can see where gold is trading within. So, John, thanks so much for calling, and I'll look forward to your next call.
Thanks for your help. Bye now.
You bet. So we got the Dow down about 60 points, S&P off 5, NASDAQ 100 down 22 points. We'll be back in just a few minutes.